Hello and welcome. My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited, part of Archer Daniels Midland and the largest non-bank clearer in the world. I'm also a Director of the Society of Technical Analysts in the UK, the oldest and one of the largest technical analysis societies in the world as well. I'd like to introduce you all to our panel and very shortly, but first off, our subject is going to be green trading and sustainability. And that's what we're going to be talking about today. And first off, if I ask Hugo to introduce yourself to our audience, please.
Hi everyone, Hugo Brodie, Vice President for Sustainability at the London Metal Exchange. The London Metal Exchange is the world's largest venue for futures contracts for base metals, or I should say forwards, for Eddie pulls me up. Our main base metals that we provide contracts for are zinc, nickel, copper, aluminium, lead, cobalt, and tin. But we can talk about that more in a bit. So,
thank you very much indeed. Paul, would you care to introduce yourself to our audience, please?
Yes, thank you, Eddie. Hi, everybody. So I'm Paul Sebastien. I'm a former energy trader. I've traded gas, power, coal, and carbon emissions in banks and hedge funds before co-founding a climate neutral commodity, which is a new certification standard for carbon neutral commodity transaction.
Brilliant, thank you very much. And finally, Alex, could you introduce yourself to our audience, please?
Yeah, hey guys, I'm Alex Raguz. I work for ElbOil. We are a fuel oil trading group, and we recently set up a biomass and biodiesel trading desk with the goal to move away from classic fuel oil trading and to ride the ESG wave.
Thank you very much indeed. Okay, we've got a number of things we're going to talk about, but first off, just to let you know, there is a Q&A session. If you look at the bottom button, there's a Q&A, and if you put questions in there, then I'll put them to our panel towards the end of our session here today. Feel free to ask questions, and that's what we're here to answer your questions together. If I start off with Hugo, and then on to Paul and Alex, what changes to a portfolio should an investor or anybody involved in the markets be looking to do because of the concept of green trading and sustainability?
Yeah, so I think it's first probably pretty important to understand what people mean when they say green trading and green and sustainability. So for the LME approach, we take quite a holistic definition. We incorporate a lot of different areas, so low carbon production, the circular economy, responsible sourcing. But really, it depends on the type of consumer and what you're looking for and where your focus is. So in 2017, we felt in the metals industry, from an LME point of view, that human rights and preventing child labor from being in metals value chains for people buying and selling metal was the most vital definition that people should take. And we used the OECD's definition of child labor and human rights to add into our brand listing requirements at the exchange. So since then, we've actually found that the definition, or it seems to us, has moved on at quite some pace. And now different users are very focused on low carbon production. When it comes to low carbon reduction, particularly in aluminium, we're less certain there's a clear, universally accepted definition as to what constitutes low carbon production. So we're looking to promote transparency of sustainability metrics rather than dictate what should be a requirement for a metals brand when they want to list on the LME, like we've done for human rights. So really, it means a lot of things to a lot of different people, and the LME's role, we feel, is to try and promote transparency of these sustainability and green trading characteristics, and allow the consumer to choose what's most important to them.
So you're looking towards benchmarks and sort of standardization so that everybody can then work towards those things. Is that right?
Yeah, so I think there's yet to be a standardization as to what constitutes low carbon production across all metals. I think certainly the aluminium industry is further ahead. They've obviously been identified by the World Economic Forum as a hard to abate sector, along with steel. And a lot of aluminium producers have invested millions in their smelters, making sure they've got these low carbon brands. But I think, say, a smelter in India and a smelter in Europe may not necessarily follow the same precise methodology when it comes to cradle to gate analysis as to carbon production. So I think that's still yet to materialize. I think when it does, and hopefully we'll find out via our various innovations that we're bringing across this year, I think then we'll be in a place to do what we've done to human rights, which we see as more of a universally accepted definition. And I believe it's coming. There's a number of good types of initiatives. The International Aluminium Institute have got one where they're developing methodology that's consistent and will give comparable data globally and not just, say, in Europe or amongst certain aluminium producers. So it's an exciting time, I would say.
Brilliant. Thank you very much indeed. Now, Paul, what are your thoughts on this?
I totally agree with what Hugo said. I think there's two things. First, indeed, there is a growing demand for decarbonized commodity, or green sustainable commodity, let's say like that. First, from companies willing to reach their ESG targets, or to respond to demand from buyers for decarbonized carbon neutral commodity, and also from the financiers, investors, regulators want to promote sustainable criteria in their financing condition. But as Hugo said, the major question on that is how to deal with all those notions, how to implement sustainability criteria of sustainability in this market. As Hugo said, how to measure the greenhouse gases for a commodity, it's pretty complex. It depends on the scope that you cover. It depends on the boundaries. It depends on the greenhouse gases that you want to measure. Only CO2 or methane or nitrous oxide or all those greenhouse gases. And then on the other side, it's how you may reduce or offset those greenhouse gases. So that's why there is a strong need for standardization, indeed, as you said, for transparency. There are some initiatives from the regulatory side, like for instance, the taxonomy regulation from the European Union for classification system of a sustainable activity, but also from the task force for scaling the voluntary market to harmonize the high quality criteria for the carbon reduction market. And I think that's the major challenge that the commodity markets are facing now to accompany this trend in a credible, transparent way to green trading.
I agree with you. And it's interesting you picked up, it's not just carbon we're talking about. Everybody talks about carbon, but it's not just carbon we're talking about. There are so many other gases which can do damage to the environment in respect of that. Alex, what are your thoughts on that, of how a portfolio can be changed?
Yeah, so we are, as a practitioner view, we are trading fuel oil, and it's very carbon intensive. And we have been thinking about how to adapt to the decarbonization wave that Hugo and Paul have already mentioned. And we think this is the future. That's why we set up the biomass and biodiesel desk. And for all of those people in the oil industry that think that's a fad that will go away, the recent shareholder meeting of Exxon should be a big lesson to all of the guys out there, where engine number one, a green hedge fund, won a proxy fight and gets to nominate two directors to the board now, which can now influence decision making at Exxon. And so we are firmly convinced that you have to add green trading, ESG, whatever the nuances that fits to your portfolio, into your portfolio to be ahead of the game.
It's interesting you picked up on Exxon. I mean, it seemed that the board there were being brought kicking and screaming to accept the new directors from an activist shareholder? Do you think we're going to see people embracing it, or are they going to be brought kicking and screaming to the table, so to speak?
I think this is a wake-up call, we have seen these shareholder proposals for years now. Usually they've been ignored, and I think they will be taken more seriously now. And that's why you have to have an answer ready for when the situation arises. And the best way is to be acting and not reacting, in my view.
Yeah, Britt, I agree with you on that. It's something that we should be actually looking forward to, rather than going and throwing all our toys out the pram. Now, please, dear audience, there are questions we can have. Please put your questions in the Q&A box, and we'll ask our panel them. I'll ask them on your behalf. Hugo, now we have yourself as an exchange, the LME, and there are other exchanges. How are they? From your opinion, how are the exchanges overall picking up on green trading? What are the regulatory challenges, and are they thick and opaque, or are they easy to see, or what?
Yeah. I just quickly, follow up on a point that Alex made as well. I think in terms of investment and funds that are looking to invest, I think since BlackRock and some of the major pension funds have started adding sustainability criteria as their investment requirements, I think in the last year or so, it's no longer seen as this niche hippie fund that's complying the companies and mining companies to actually act. Now it's the massive sustainability funds that are now taking a role and having a requirement for like TCFD disclosure requirements and things like that. So just on your question, Eddie, so when it comes to what the exchanges are doing, and I can only really talk about what the LME are doing, and when we're a little bit unique, as you know, because we've got this huge warehouse network and this physical delivery mechanism, which means that when a futures contract comes to expiry on the exchange, although it happens in less than 10% of trades, you can actually deliver metal to one of our warehouses against one of the contracts. So we have to actually run a brands list, and there's actually physical metal that backs up the majority of our contracts. We do have a few cash settled contracts as well, like other exchanges. So we've had to actually take a really active role in making sure that not only do our brands meet, and we've got about 540 globally, meet these metallurgical and chemical composition requirements, but now also we're talking about sustainable aluminium and green metal, but we also include human rights characteristics. We're also building into our requirements that they have to meet these human rights requirements as well, and to show us appropriate due diligence. So as an exchange with physical delivery settlement, we're taking a really active role in talking to the producers of LME metals and making sure they're meeting these requirements. When it comes to low carbon requirements, we're not yet there. As I said before, I think that the methodology is still being agreed. There still needs to be a bit of a consensus amongst the industry. But what we are doing is we're building a platform where all of those producers who are listed on the LME can also voluntarily upload sustainability metrics to their brand via a platform called LME Passport. And from there, consumers who want to source sustainable metal, want to source green metal, can actually search via this platform and understand what each producer is highlighting as their green characteristics to their metal. It's on a brand or smelter level. We're also launching a number of new contracts. I know other exchanges are also launching offset contracts where you'll be able to offset your carbon exposure. But again, we don't think that the market is yet there for understanding what exactly the offset will be, because the methodology and the global acceptance towards what emissions actually are is still not agreed upon by a large enough scale of people around the world. Obviously, the European Union are looking into this. Obviously, the Biden government are looking into this, but there's still, we don't think, enough agreement as to what constitutes core carbon principles for there to be a really good and clear offset yet. Again, I think it's coming very soon. We just need industry and coalition.
Well, it's all, I agree with you on that. And I think there is a big push forward. The ESG surge has been going on now for 2+ years. It goes back to when Kofi Annan sent the letter to 150 financial institutions. And that's when it all kicked off. But I mean, one of the things that occurred to me was about transportation. Is they're going to be accounting for transportation of metal?
Mhm.
There will be, yes?
Yeah, so again, I think if you're going across all metals and if you're going across all commodities, then I think you do need to factor this in. You do need to go to that granular level. And then we're also, a friend of mine works in analyzing carbon emissions along the value chain. And he says there's all sorts of things that companies, less scrupulous companies, can do, such as making the power station they use, moving it to a separate entity suddenly so they don't have to record that as part of the
greenwashing.
There's all sorts of things that occur. So until we're really confident about the methodology and it's standardized and auditable, which is very crucial, I think we have to be careful to say this is what the carbon emission is globally. But I don't think that's enough to say don't do it. I think we have to work together more, and there are certainly a number of initiatives that are doing this. So it's good to see.
Thank you very much indeed. Paul, in your markets that you look at, what do you think? Do you think are the exchanges, when you're using them, obviously, are they picking up on this, or is this something that they're sort of like being brought kicking and screaming, or are they actually going ahead and saying, no, we're going to make an effort to do this right the first time if we can?
There is several points. First, indeed, I would like to bounce back on what you said. I think it's indeed that's all that is question of credibility, especially for an exchange, for the market, as Alexander said, for a group. So the main risk for a company, a group, an exchange, whoever, is to face backlash of greenwashing charges if there is a misuse of those notions, if you miscalculate the impact, the carbon footprint, and if you don't reduce offset with indeed high quality carbon certificates. I think that's the main questions. Indeed, Eddie, we see we see a growing demand, and we see already very present demand for carbon neutral transaction, not only for the shipping but for the full life cycle from production to gate, so cradle to gate, or even to cradle to grave. So this demand is driven by market stakeholders, but also from the financial side, and the pressure is maybe more from the financial players who want to build bridges between their financing activity as usual and their own criteria and policy for sustainable financing.
So you see opportunities. You see that there are people interested in actually getting involved in a green trading and sustainable way.
I think yes, that's always the case. And I would like to also to answer a question from Elaine from which is
the voluntary decarbonisation project,
and which is also aligned with the point that Hugo raised on the criteria for the offset. Indeed, the voluntary carbon market, which may be the market of this decade, supposed to some analysis states that it's going to be multiplied by 15 within 2015. So it's massive. But this market has voluntary. Have been there are numerous standards. There are numerous ways to claim for carbon reduction and offset. But there are initiatives, international initiatives like the Task Force for Scaling of Voluntary Markets, answering the Article 6 from the Paris Agreement, which is working in this way to define core carbon principles. And there is already a kind of a consensus on those criteria.
Brilliant, thank you very much indeed. Now, Alex, in the markets you are involved in, have you seen there being a demand from the the exchanges being able to satisfy a demand? Is there a demand, and are you able to see some satisfaction from that?
There is for sure a demand, but the demand for the exchange-driven products is like the second order effect. The main demand is like is for the actual greenhouse reduction trading, and it is very difficult so far. So before we get an effective exchange-traded contract, we need to make sure that the underlying physical trade of the commodities is in that way standardized that it can drive user adoption. So if we look from our own experience, regulatory hurdles to entry are very high. The accounting of greenhouse gas reductions and emissions along the whole value and trading chain is very complex, and you have to get it right, because basically you cannot rely on that what your supplier is sending you, nor can you rely on what your customer is confirming. You have to check everything twice to be, because when the regulator comes for an audit, you need to account for all greenhouse gas emission reductions in your trading, and that's, I mean, coming round what we said earlier, especially the transport part. Sometimes it's not clear where, well, which participant already has or has not accounted for the transportation part. So having mass balance accounting across the chain, especially in fuel oil trading now, is very important. Once you have that, we can go down the exchange route, and I've said it before, the adoption and the growth of a derivative contract and the ultimate success of this kind of contract is driven by end user demand for that derivatives, aka hedgers. You can have the top 5 market making firms in the world providing liquidity to a new contract. There has to be legitimate end user demand for this market to take off.
I understand that entirely. Now, the thing I'd like to also remind everybody is we've been talking a lot about the environmental and sustainable part of it, but there's also the social implications, and Hugo has spoken about that a little bit already. Hugo, there's a question specific to you, and then I'm going to ask you another one, which is going to be around for everybody. The question is from Amit, who's asking, I don't think you can answer this now, but if you get back to the in due course, what would be the extra premium over P1020 LME aluminium is willing to accept for green aluminium? I don't suppose you could really answer that at this particular point.
Yes, so the LME doesn't have a premium aluminium contract. We just have a primary aluminium contract. Any premium you pay above the LME price, you negotiate with OTC. So we just have the base aluminium price. But what I will say is there are 3 different PRAs, price reporting agencies, who are now all reporting independently low carbon aluminium prices, and I think they all have slightly separate methodology. To give you another example of how broken up this fragmented. Thank you. Yeah. So there's a Platts price, there's a fast markets price, there's a Harbour price. I think, for example, the Harbour price takes into account any caused low carbon aluminium, any aluminium that's produced with 4 tons of carbon per ton of aluminium. I think Platts may be slightly different. So yeah, it's still not clear what constitutes low carbon aluminium. So until that's clear, over the counter, I don't think it'll be clear what people will be willing to pay in terms of premium. I think as of the last time I looked at it, a month or 2 ago, admittedly, there was no premium recorded by any of these PRA companies. So it's still yet to be materialized. But again, the premium will happen, I suspect. But I can't say too much more as my compliance team doesn't let me talk about the price. So I have to.
No, I think you've actually answered much more than I thought you would be able to, because it was a very specific question. Now, here's one for you, and then for the rest of the panelists. It's along the lines of this. from one of our from Sultana, who's from one of our Q&A people. Where do you see hydrogen coming to play? Now, Hugo, bear in mind, hydrogen chemically, I believe, is a metal. And do you foresee there being a futures or a forward exchange traded contract in hydrogen?
So I'm not aware of any near-term plans for a hydrogen contract. If the LME was to launch one, obviously I think it would need to be a cash-settled derivative, because I don't think you can store the hydrogen in our current warehouse system. I saw Robbie from Henry Bath is on the chat, so maybe he can tell me if Henry Bath can store hydrogen in their warehouses. But so I do have to be cash-settled. But if there's enough liquidity, there's enough demand to hedge your hydrogen exposure, I don't see why not. It's something that could be done, but I'm not aware of near-term plans.
Right,
I think
so a definite maybe then.
Exactly, nice and concise. Right for you.
Paul, what do you think? Do you think hydrogen will come into play in this?
I think that hydrogen is going to follow the same trend as the LNG. LNG was not a liquid commodity, let's say 15 years ago. Now that's a massive commodity and massive market. So hydrogen has to be liquid. So we have seen liquid in terms of liquid form in the market, and we have seen the first LNG carrier launched last year. So it's becoming a commodity. It's starting to be traded, and so I don't understand why it would not be a commodity exchange on exchanges as other commodities in the coming years.
Brilliant. So this is something new that people will not be trading, have not been trading in the past, which they will then start trading in the future, possibly. Okay, Alex, what are your thoughts on hydrogen?
I have to agree with Paul here. I would make the same bet that it will follow along the tracks of LNG. It's not liquid yet. It will become more liquid as the user adoption grows. And from what I hear from like several large gas trading desks, they are making plans to set up hydrogen trading capabilities. We'll probably start the same as LNG, first over the counter, and then once there are trade patterns established, then it will at one point move into like centrally cleared on an exchange. It's like all commodities, and then what kind of contract will look like is probably open for discussion. But yeah, I totally agree. This will be in. I'm pretty convinced that in 10 years we will have several hydrogen trading desks, and the market will be quite liquid to those who are participating in it.
Thank you very much. That's a very valid point there. Okay, we've only got a few minutes left, so if you want your questions from our dear audience, please put them in so I can ask them, because I'm going to start with a really final big question I want to put forward to, which is, and Hugo, I'll start with you. What opportunities do you see in the future for green trading and sustainability? What do you see in the future? I won't necessarily tie you down to any particular thing, but let's say in a few years, what do you see that's going to be the next wave of what we're looking at?
Yeah, so it is an expansive question. It's a good question, and I think it depends on who you are in the market, what type of market actor you are. But I think what's clear is that consumers across the world, from China to the United States, to the UK, to the EU, all these countries are putting across net zero goals collectively. It's clear that carbon emissions and sustainability awareness from your average consumer is not going away. It's only going to grow. And so there are going to be a lot of opportunities, and there are a lot of drivers for people to invest in making sure that their commodities are ethically sourced, be it biodiversity, be it human rights, be it low carbon production. And I think there's now key commercial drivers, not just ethical drivers, for people to invest and make sure that they're doing the right thing. I think we all have a collective responsibility to do the right thing. So there are going to be great commercial opportunities globally from the the great investment we'll see across the sustainability category board going forward.
Thank you very much. Just as a byline, Hugo, you might be interested. We've had one of the comments in our chat that the Port of Rotterdam are working on a hydrogen exchange. So if you want to have a chat with them about that idea, your colleagues there at the LME, maybe you can work something out together. Anyway, moving on. Sorry?
I'll buy it in the room. How much?
That's for you and them. I'm just the facilitator. So, Paul, what opportunities do you see?
I think that Hugo is right. I think the question is not if, it's when. And for companies, the question is not if they can address those opportunities, but how they are going to adapt their strategy to respond to those opportunities and to make business with those opportunities. And we see that just to give you an example, banks now are willing to finance a sustainable trade. But in the coming years, we may see that for companies that are not really committed to support to make a sustainable green trade, it will be very difficult to get financing.
Thank you very much. And we're running shortly out of time. So, Alex, what are your thoughts on opportunities in the future?
I think the opportunities will be great. The innovation wave is probably the biggest investment wave for the next 10, 15 years, and it will probably not go away. For that, it has way too much buy-in from shareholders, from governments, from non-governmental organizations. It will be the defining investment wave in this decade, and I can't say who said it first, but I think this is true. The world's first trillionaire will make his money in climate, and that's why I'm convinced that you have to embrace this and be an actor, not a reactor.
I think that's a very valid point, is to actually go forward with this and embrace this, rather than, as I said, originally being brought kicking and screaming to the table. Okay, we've got a few minutes actually left. I've just been told we have a few more minutes left than I thought we were. So we've got an opportunity to have any questions. One final question from the audience, if we can. I've dealt with the green premium and hydrogen so far. But I wanted to actually ask about double counting. That's my concern, is that we're seeing a situation where double counting takes place. If you can have a quick word, a thought about double counting, that some people count that the actual premium, the carbon emissions are actually being doubled higher because of the way it's done. And I wanted to know, Hugo, do you think that there's going to be, in the methodology that you're looking at, how are you going to prevent double counting taking place? And also double counting for the greenhouse emissions reductions as well.
Yeah, it's an issue, and it's an issue that when we released our sustainability discussion paper was highlighted many times. You want to be aware of not just isolating some sustainability indicators, and so that they count this as their emission and then don't count it at another level of the value chain, and it's a real issue. So I think not only do you need robust methodology that goes from mine site, I'm sorry, I'm always talking about metals, but mine cradle to gate, mine site to smelter is where we look at. But you also need independent and verified auditors as well. And you need data that needs to be auditable. And with an independent and verified auditor, you'd hope, and then the assessment that they carry out on the value chain, that they could avoid double counting. And again, it's hopefully avoidable if everyone is using the same robust methodology that's comparable, and then there are checks and balances to help avoid this. But again, I think it probably helps to have this independent third-party verification in an audit as well.
Thank you very much. And Paul, what do you think?
I think indeed that the verification, the assurance provided by third-party verifiers is a core issue in all those questions, and to avoid double counting, but also double claim for reduction and offset.
Yes.
And so there is a demand for, let's say, from all the recognized standards for verification. And also, I think that's one of the main questions of the Article 6 from the Paris Agreement that are addressing by the TSCVM is indeed how to harmonize this verification versus double claim and double counting within the harmonized voluntary carbon market.
Thank you very much indeed. And Alex, what are your thoughts about that?
Yeah, I mean, I agree with both Hugo and Paul. In our part of the commodity trade, in like biomass and biodiesel, we have already like several independent parties that audit companies involved in the greenhouse trade. The audits are also quite strict, which then in turn makes it hard to enter this business because you have to have the proper accounting in place, as I already said. Apart from that, yeah, there are all the issues mentioned by Hugo and Paul. In addition, I don't know how much that applies to the metals part, but it definitely applies in the oil and fuel oil trade, biomass, biodiesel, is not only the double counting and double claiming, but also the quality of the biomass and the biofuel, as well as for example, also the origin of the biomass. So there's not much. So you could get by in the past by trading palm oil as biomass, which in itself, yeah, if you turn it into biofuel, is is compliant to all the rules, but obviously it is it's messy when it comes to actual greenhouse gas reductions when you look into the value chain of how palm oil is produced. So the world is moving on into, at least in our part of the commodity trade, into advanced fuels, which are reclaimed, and that's much more hard. It's much harder to account for, but it's also, if you get it right, much more sustainable in the long run.
Thank you very much. Now we're about to finish up. I'd ask you all to think about a short phrase of 7 words or less, sentence if you will, about what you want people to take away. I'd see there's a question, more than one, about nuclear, but I don't think we have the time to handle this, or necessarily the expertise here, because I don't think, is anybody here trading nuclear? Right, I think we'll have to leave that one and put that aside for another time. Please drop a line to the commodities people who will then pass it on to us, and we'll maybe answer that individually. But Hugo, if you have a short phrase of 7 or less to say to people to take away and go, this is what you should take away from this, what would it be?
I'm sorry, I have to echo my last comment and say that this is coming. This isn't just a fad. And I think we all have a responsibility collectively to ensure that sustainability remains at the forefront of our thoughts, and is going to be the big, and metals can be the big sustainable enabler, we feel. So that's my way more than 7 word
I was
answer.
going to say, maybe start learning to count. It's 7. So, Paul, what would you say?
7 words. So I think that green commodity markets will raise large business opportunities for companies that adapt.
Well, it's better than what Hugo sort of get it in. Alex, please, 7 words or less. What would you say?
Yeah, I'm a trader at heart. Decarbonization is the wave. Bet on it and make as much money as you can.
Well, yeah, I think that's a given in many ways. Gentlemen, thank you very, very much. It's been fascinating and brilliant to be here. Thank you, audience, for listening in.